Hello, I'm Rachel and you're watching Hot Performers here live on Kalkine TV. Now, as the Christmas season nears, people are gearing up to purchase gifts. And according to experts, pent-up demand is expected to boost the economy. The retail and consumer discretionary sectors are expected to lead from the front this festive season. Here we're looking at a few ASX-listed stocks with over 8% returns in the last year, which can be looked at for the festive season. First up, Setier, a global online luxury goods retailer operating through its website, Setier.com. The company uses its proprietary platform to sell shoes, bags, apparel and accessories from globally leading luxury brands. The company's recent mid-season sale offered products at a 60% discount with over 100 new items in store. In the 4 months to the 31st of October, Cettier reported a 184% rise in gross revenue. Sales rose by 172% compared to the previous corresponding period. Active customers jumped by 220%. The number of orders advanced by 209%. Meanwhile, the stock gave a return of 670% in the last year. Cetier has partnered with fashion-focused research and developer, producer and distributor Staff International in a deal that will see its brands hit the Cetier site. Staff International is a subsidiary of international fashion group OTB. Staff International works as the industrial platform for some of OTB's labels. The direct brand partnership will also see Cetier exclusively housing part of Staff International's collection. Cetier states its integration with Staff International is incremental to its existing access to inventory. Next up, fashion jewellery store Lavissa. They operate 544 stores across the world. In financial year 2021, the company entered 6 new European markets. In the Black Friday mega sale event, customers got up to 70% off discounted ranges, plus Black Friday exclusive offers. In financial year 2021, Lavissa reported an 18.9% rise in revenue. Net profit after tax rose by 43.3%. Online sales surged 178%. Meanwhile, the stock gave a return of over 88% in the past year. Management's outlook can have an impact on investor thoughts on valuation and also Lavissa's share price. Lavissa says that despite the disruptions business continues to face globally, management are pleased with the way business has performed and remain focused on continuing to drive its store rollout. Victor Herrera has now formally started in the role of CEO and has previous experience in growing businesses into countries like China and India, which Lavissa might be interested in growing in. Before we move to the next stocks from retail and consumer discretionary sectors, let's take a small break here. I'll be back soon.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Welcome back, Rachel here. You're watching Hot Performers on Kalkine TV. We're looking at stocks from retail and consumer discretionary sectors. The next one to look at is the Accent Group. They're a large investment holding company engaged in the retail and distribution of footwear and apparel businesses. In its latest trading update, the company says that the trade for the first 18 weeks of financial year 2022 was significantly impacted by the state and territory-wide government-mandated store closures. The company estimates that the impact impact on owned retail sales for the first 18 weeks was almost 26% below the original management plan. However, the company expects that the worst is over for now and its inventories remain clean of aged stock. It's optimistic about taking advantage of customer demand from November to January. Meanwhile, the stock gave a return of over 34% in the last year. The good news is that Accent appears to be over the worst of its issues. Management notes that its inventories remain clean of aged stock and there's approximately $20 million of additional stock sitting in core and current seasonal styles. As a result, it believes the company is well positioned to take advantage of customer demand from November to January and is not expecting any material impacts or inventory shortfalls from globally reported supply chain issues. However, due to the ongoing uncertainty around trading conditions due to the COVID-19 pandemic, Accent has decided not to provide any forward guidance at this time. And lastly, we have JB Hi-Fi, the electronics and home appliance retailer with operations across Australia and New Zealand. The company's sales in the first quarter of financial year 2022 was only down 7.5%. Sales were actually up 17.3% compared to financial year 2020. In its recent annual report, the company's management showed positivity towards financial year 2022. Company's CEO Terry Smart says that despite financial year 2021 being a challenge for the retailer, its business model saw it performing better than ever before. In October, JB Hi-Fi says its sales momentum would benefit from the reopening of stores in New South Wales. Meanwhile, the stock gave a return of over 8% in the last year. JB Hi-Fi has long been a major beneficiary of the pandemic due to stimulus-fueled spending and a boom in demand for home office equipment as people were forced to work from home. However, the recent extended lockdowns across Sydney and Melbourne have forced the company to largely shut its stores, bar for click and collect and essential shopping. Well, that's all for now. I hope you enjoyed this show on the stocks from retail and consumer discretionary sectors. Keep watching Kalkine TV for more trending market updates. I'm Rachel, signing off for now.